So how's everybody doing, man? How's everybody doing? I hope we're doing well. We love our Q&A on Friday. I'm Derek Vickers. If you don't know who I am, I'm the founder and CEO of Victory Capital. We own and operate mobile home park communities. Yeah, we bring everyone in our Facebook group this Q&A every Friday. Awesome. So welcome. And one thing I wanted to mention here. So at Victory Capital, if you are a passive investor and you've been, studying mobile home parks and you're like interested in, potentially taking a look at investing your capital and you don't want to do the work, you don't want to deal with the crazy tenants, you don't want to deal with the banks, you don't want to deal with all the stuff that you have to deal with, all the stuff, right? Maybe you're busy, maybe you do something else and you're really successful at that. That's exactly who we help at Victory Capital. We help those people that are too busy and they don't want to deal with the BS and have to take the calls and deal with the craziness. Because if you're just buying your first park, you're going to have to do most of that yourself, because a third-party management company is probably not going to do the job that you want, and you're probably going to end up paying them too much. So anyways, that's what we do at Victory Capital. So if you go to www.victorycapital.com, that's Victory, VICK, TORY capital.com. Would love to set up a call with you, or you can get in on our investor list immediately and right now and get access to our exclusive deals and then get access to our fund that we're starting here in the next couple of weeks. So the first question here that we've got, what cap rates, this is from Ted, what cap rates are you seeing cut for parks with no amenities, 100% occupied, no major CapEx needed, and have between 20 and 30 lots? Well, I mean, it's just going to depend on where you're at. And with that, it sounds like you're talking about a more stabilized property. So if you're getting it off market with the seller, if you're in a great market, it's probably going to be a 6 or a 7, if you're lucky. I mean, if it's in a great market in Florida and you could pick it up for a 7, I'll take it. I'll take it at a 7 cap on my expenses, not the seller's expenses. But if you're in the middle of nowhere, maybe it's higher, maybe it's 8 or 9. I mean, it's just so hard to say, because we're working in a market on some deals right now. I'm talking to a reasonable seller. It's 100 and some lots. We're literally very close to going under contract here. But then there's another seller with 30 lots that wants a forecast. So it's like, whatever, right? The in-place cap rate, to me, yes it matters. But like, you also have to look at, like, hey, what cap rate are you going to turn it into in year one? With your better management, your decreased expenses, all of the stuff you're going to go in there and do and make better. Like, what's the cap rate going to be after that? Right. And then you can look at it from that perspective, versus what they're doing. I mean, because it's just kind of a loaded question. In a great market, you may be 5, 6, 6.5, or 7 if you're lucky. In a rural market, you may be up in that, 7, 8, 9. It just depends. But some of these prices now I see on LoopNet and Corexy just blow my freaking mind. I mean, it's just like, I don't know. I don't know. You guys know what I'm talking about too. It's just kind of wild. Anyways, Harry. Hey Derek, I came from the residential side and I'm making my transition to the MHPs. I'm in Fort Lauderdale, Florida. I want to reach out to mom and pop owners off market. How do you recommend I get owners info so I can mail out campaign and start cold calling? Thanks, Harry. Luckily you're in Florida and it's pretty easy. If you shoot me a message, I can tell you where to get that. Everybody knows about it. You can check. It's a health department list. The Florida Health Department list is a good place to start. It's not perfect. There's dead numbers. We've refined that list, so our list is really, really good. But that's a great place to start. And if you find anything in Florida, Harry, that you can't take down, please let me know. Please let me know. And if you can find something in Fort Lauderdale that you can make sense of, I would love to own in Fort Lauderdale or South Florida, but it's just a hard market to buy in. It's just wild down there because the land value is the land value is way, they can build 300 units of multifamily on the park or more. Uh, Dean said brokers buying the listings. Yes, they are. And it's annoying. It's annoying. And even, there's good brokers out there, and like they're frustrated too because they have some brokerage shops that act like used car salesmen, and they go out and they're just literally buying listings. Like that's right. It's exactly what they're doing. I posted something on or Twitter X one time, and I was like, "Hey, everyone else thinks they can sell for a 3.5 cap. I'll sell for a 3.5 cap right now." And then, of course, a broker messages me and says, "Hey, I've got buyers that could do that," and they don't. Like, I'll get emails, from people, brokers, that they're like, "Hey, Derek, you want to buy this park? It's 250 grand a pad." So essentially, a seller just said, "Yeah, I'll sell it a freaking 3 cap," and then they actually shop it out. Um, so you're right, Dean. You got me. You hit a button for me, dude. You hit a button for me, dude. It drives me insane. Um, okay, who else was asking here? I think Gene. Gene, how's it going? I hear about buying a park with no money. How would that be possible? So it is possible. So there's a couple different ways that you can do this. Obviously, um, first of all, I would say, and you've probably heard me talk about this before, I wouldn't buy only based on no money down because you may miss out on deals that you couldn't get for no money down. But here's how you can do it. Um, One way is obviously seller financing, and they just say, "Hey, um, I got, I'll take 0% down, right?" And whatever the other deal structure is. So that's one way to do it. Also, you can do it to where the if the deal is good enough, then the bank, let's just say they give you a 65 or 70% loan, then you can get the seller to hold a second for the down payment. Now, the bank will probably still want you to put something down, right? Then I don't know, you could go to friends and family or something and raise the 5% or whatever they're going to want you to put down. But the bank's going to underwrite that based on global debt service, meaning the debt service for the loan from the bank and the debt service from the seller note. And if those numbers work, the bank will take a seller note as a part of a down payment. So that's a way to do it. Um, you can do seller financing with sub two. I mean, there's different ways that you can do that. If the seller has a mortgage that you can just subject to, or you can take the mortgage over. Um, you can do that too, but those are the ways that, I mean, look, there's thousands of different ways that you can structure a deal. And I know it's enticing getting something for no money down, but most of the parks that you can probably get no money down on from like seller financing, they're going to be shit. I mean, they're going to be terrible. So I would just watch, because if I was only looking for deals with no money down deals, it would just be harder for me to find something that pencils. And I know in the beginning it's like, oh my God, I don't have any money. How am I going to do this with and get in it with no money? Um, it's interesting. Like in now that we don't try to do that, we sort of are able to sort of find some of these opportunities where we can actually get in deals with no money. Like for example, we were looking at a deal, and the deal was good enough. The seller was going to hold a second, and we would have still had to put like 5% down, but the deal ended up being shit, and we didn't buy it. But we had never really had those opportunities before, and there was another deal that we got sent from a bank that someone was about to close, and they couldn't close, and they were doing that. Actually, the yes, the bank had the loan, but the seller was holding a second, and we were going to have to come in with just closing costs. But again, the deal just wasn't that exciting to me. I mean, you're going to go in and do a lot of work, and yeah, it's no money down. This was like an RV mixed with a mobile home park. So like, I just don't think we could have gotten the appreciation to make it worth it. Like if we could have doubled the value of the property in like 12 months and we get all that equity, yeah, that's cool. I like that. But I don't think we were able to do that. And the cash flow after all that debt service was going to be like I don't know. It wasn't a lot. It wasn't a lot to get excited about for that headache, and I just wasn't excited about the deal. Oh, you've been managing parks for 25 years and want to get into ownership? Yeah, yeah, dude. I mean, definitely, definitely. But that's how I would do it, or find some people to partner with. Find some people that you know that that have funds, or can get funds. I mean, we partner with people. We're working on partnering with two people right now on deals. And that there's different aspects of that, different aspects of how we do that. Whether you need us as a recourse signer on the debt, we can raise capital, whatever, but we have to like the deal. Yes, yes, Dean, you're exactly right, dude. Maybe no money down yet, still funds for CapEx. Absolutely. Absolutely. You are going to need that CapEx money, because if you're buying a no money down deal, you're going to need some CapEx. It's definitely not going to be stable, right? And if you want to go in and do all this stuff and increase the rents, like, you're going to need to bring some CapEx, right? Because you're going to have to pave the roads. I love paving the roads because um, it's such a difference maker in the park, right? So you're always going to have to bring money. And I think people, the, I talk to people all the time that kind of lowball the CapEx. And I've done that before, and it's just not fun. It's just not fun bootstrapping it every month. It's just not fun. And maybe you've heard me talk about that on one of the first deals I did. We didn't bring enough CapEx money, and every month it's like, oh my gosh, like, we need to sell a home because we were selling some homes here to get some money to pay for something, right? So yes, CapEx is you got to have some CapEx. And actually sometimes the bank will so we're working on a deal right now where the bank will they're basically going to earn out our CapEx. So we have to bring the money to spend it. They're going to put it in the loan, but we have to show that it's done, and then they're going to give it, which is kind of cool. I like that because we didn't even plan that, and we had already raised all the money for it, so it was fine. Anyone had experience with the 21 cash program? Looking into it now for one of my parks. I would appreciate any feedback. And I think we talked a little bit about this week. I've never done the 21 cash program. I've heard good things about it. We typically buy used homes and bring them in, because that's just you know that just works that just works in the markets that we buy in. But I don't have a lot of data on that. I'm not going to pretend like I know a ton about it when I haven't done that much about it. What is an average operating expense percentage for an all tenant owned park, and one that is half POH and half TOH? Okay, this is a good question. This is a good question, and it's not like you know, it's so all TOH, right? So it depends. So it depends on where you are. So in Florida, if you have your management fees in there, right, you're going to be about 40%. You're going to be anywhere from 35 to 40%. Like, we have a deal right now that had a really good month last month, like not a lot of below the line BS fixes. And we're at about 32%, which is really good. So that is an all tenant owned home park. Um, wait, yeah, 32%, even with the management fee. Really, really good month. Um, that's an all tenant owned home park. It is well and septic, so there was no septic issues that month. Which there really aren't that many. Um, and we just had to pay for the well servicing fee. We were at 32%, and I looked at this yesterday. I was like, oh dang, we had a pretty good month here as far as expenses go. So I think when you're really stabilized, all tenant owned homes, you can expect that. And this is Florida. This is going to probably vary a little bit per state, because Florida property taxes are going to be about 2% of your purchase price. And then if you throw some park owned homes in there, when I'm underwriting park owned homes, like, I don't know, I just kind of got a feel for it. If it's half park owned, then I may say, hey, my operating expenses going in maybe are 45, maybe less. A lot of people don't call for repairs in family parks on park owned homes. They just don't. It's only when they move out and you got to fix them. But you should be getting rid of your homes anyways. Don't keep the homes. I never keep the homes. We always get rid of the homes. So we don't, we expect that it's gonna take 90 to 180 days to turn over all the homes. Yeah, I mean, when you're underwriting, say 40%, if it's all park-owned homes, say 50 to 55% to be safe, especially if they're gonna want to count all that income. And you may be surprised when you buy that park that's all park-owned. That's actually it's a little bit less expenses, but I always, you know, we err towards the side of very conservative on that. But that's a good question because it's kind of weird. And then you throw some RVs in there, you throw a house in there, you throw some boat docks in there, it even gets more weird, right? Maybe I'll do a whole underwriting class again, and you can sort of get into my mind there and how I look at this stuff because it's a bit of a science. Dean said, "Wow, it's a pearl of wisdom right there. Asking bank to finance some capex in the purchase of the loan. Yes, yes, you can do that because the bank they want the property to be better, right? They want it to be better, right? We have another deal under contract right now where they didn't have this, and we asked them, and we were able to do it because we're like, hey, we don't. In this particular deal, we weren't. Look, we would have brought more money because it's just a couple of us buying this deal, but like we didn't want, the less money we bring, it dwindles the return. It waters down the return a little bit. So we asked the bank, and of course they're like, yeah, we'll do that. The deal has to work. The deal has to work, right? But they will do it. But on that show was great because he really broke it down, right? And I was underwriting multifamily and learned how to just underwrite a deal really fast. Like, I have an analyst that works for us, and we got sent an email the other week that was like, hey, we're a company that we help people underwrite deals. We can get your underwriting back in 3 days. I'm like, dude, it takes me like 30 seconds to underwrite a deal and know if I want it. Like, I don't need 3 days, bro. Right? It's just like boom, boom, boom. And I think that comes from like knowing your market, and I think that comes from like you knowing what the expense ratios are going to be. All right, here we go. But it's funny, this guy's talking about Grant Cardone, actually. When I saw Grant Cardone speak, one of the many, many, many things he offered was that his opinion, one should buy an apartment house of at least 16 units. Do you have an opinion regarding minimum park size? Well, that's a great question, by the way, because I've never really talked about this. Now, I don't really have a number, like, because you can, like, I've actually seen some smaller parks that, like, would be decent for someone to buy, like, if they're really good. Like a smaller park, like a 10-unit park, it has to be a screaming deal. Like if you're gonna buy it, right? But if you're gonna buy it and make it an 8 cap, like I don't know if that's worth it. I mean, you got to make it a 20 cap, right? We've got a deal under contract right now. It's a smaller deal. It's in a new market that we're exploring, but we're literally buying it at an in place, like I don't know, call it a 12 cap or 13 cap. It might be more than that. Right? And I think after the first year, it's going to be like a 20 cap. Like it's crazy. So that like a smaller deal, I would buy it if you're really going to get the cash flow. But if you're paying market value for it in retail, I think you probably want to be. I guess you could buy 15. We bought a 15 or 20 lot park at retail, but it was in a market where we knew we were stealing it. We bought this park, a smaller park in Lakeland, Florida, a freaking great market for like 45 a pad. Like I know it's going to be worth 100. Like it's just very soon, very soon. So I thought we were stealing that. So I would use that same logic if you think you're stealing it, but you have to know what the price per pad is in that market and like what's psychotic, what's um, borderline psychotic, what is crazy, what is normal, and what are you stealing it at, right? You got to know those numbers, right? Like what's if you're looking in a market, right? What is the number where you're stealing it, right? And then you can kind of base like your underwriting there. I look at price per pad a lot, and not price per pad, price per occupied pad. How many boxes are there? Sometimes I count the vacant park-owned homes and sometimes not. If I'm in a great market, I can count the vacant park-owned homes because I know I can sell them, even if they're pretty bad. If they're really, really bad, then I may not count them. But I count, like if it's a 60 unit park and it's $6 million, right? That's 100,000 a pad. I'm not buying that anyways. But if it's a 60 unit park and there's 50 occupied and it's 2.5 million, then I'm really, what is that, guys? 50, that's 50 and occupied, right? Depending on what market, like, but that's the number I look at. I don't look at the total price per pad. I look at the price per occupied pad, because I know if I'm getting a good price per occupied pad, I can make that deal go right. Now we've looked at a deal. Now there's some interesting parts of this is like, we know, so in some of these markets we've seen, hey, the price per occupied pad is like, man, that's really good. But the rent's $200, right? It's 45 an occupied pad, which in Lakeland, Florida is a great number. But the rent's $200. Okay. So I would probably still buy that because there's a lot of room there. It's just not going to cash flow that well in the beginning, right? But again, if you look at what parks are trading for in that area and you're like, man, I'm stealing this at 40 a pad, then you just buy it, right? You buy it and figure it out, right? Especially if it's in a great market. I would totally buy that and figure it out. So, you have to look at those things. I look at price per pad a lot, and I'll tell you why I do that too, because I'm looking for equity jumps in like multiples, right? I'm not playing the cap rate game where I'm buying at a 4 or a 5 hoping to get it to an 8 and hitting a 13% IRR and a 15% IRR. I want to hit a 40% IRR, and I want to buy a park where or buy it for 2.5 and make it worth 5 or 6 in those first 36 months, right? And if things don't go well, I do that in 3 years. I think, and then back to the underwriting thing, I think that'll help you on your underwriting, right? If you really hone in on a market and see what the price per pad is there. Like what's psychotic, what's crazy, what's okay, what's normal, and what are you stealing it at, right? We're buying a deal right now in Melbourne, Florida. This is another story, the bank craziness we're going through on this. There's a park listed for 125 a pad there. That's psychotic. Okay would be like 70 a pad. And I'm close to stealing it at 53 a pad. I'm close, in my opinion, right? But it's fair. I think it's fair. Maybe I'm not quite stealing it, but I think we're really, really close. We're definitely paying a fair price for what it is. But yeah, I keep thinking about this, Justin. I think that'll help you on your underwriting and kind of being able to tell if a deal is good or not is like really looking at that price per pad measure. Because like, look, if you're new in this business, you're not in capital preservation mode. I can't imagine you're trying to multiply capital quickly, which is what I'm trying to do. Okay. But minimum park size, like, I don't know. I just think the deal's got to make sense. I probably wouldn't go under 10. I mean, and then I'm like, okay, well, maybe someone could do 8, but like, what's the cutoff, dude? I mean, I definitely wouldn't do 5. Barrett, hey, Dr. Matthews, what's up? What do I say to people to gauge if they are willing and able to invest when I want to raise funds? Yeah, so this is the thing that I use, and it works really, really well. And look, if you're looking to like, you need to start doing this now, right? If you're looking for deals, you need to start doing this now. You go up to your friends or family or whatever and you tell them what you're doing. You're like, hey, I'm doing mobile home parks now. Looking for deals. I'm going to be raising money for deals. I don't have anything right now. Don't have any deals right now. Takes the pressure away. But when I do you want to? But when I do have a deal, would you be interested in taking a look at it? Right. So everybody, now the problem with this, I'll tell you, So I'll tell you what I like about this. What I like about this is that it takes away the pressure. So like, hey, I don't have a deal now, so I'm not trying to raise money from you now. But when I do, would you want to take a look at it? Can I add you to my investor list? Yeah, sure. Most people are going to say sure. But then when the rubber meets the road, and you call and say, hey, remember I asked you? You said you'd be interested. Here's the deal. No, I'm not interested now. Okay. That's why you need to do this and build up a massive pipeline of people. You got to do that because especially if you don't have a track record, no one's going to trust you at first, and you're going to have to be really, I don't know, you're just going to have to figure it out. I mean, a lot of this is figuring it out. I'm still figuring stuff out. We're starting a fund right now. I have no idea how to do it, and so a lot of it is figuring it out, especially in real estate. And I think the best way to do is take it step by step. Like it's just it's a lot of figuring it out because you're going to have stuff that comes up. You're going to have the banks that are taking their sweet ass time. You're going to have stuff, and you're going to have stuff, and you're going to have more stuff. And it's like you're a professional problem solver at this point. Like you're going to have stuff. You got to solve the problem. You got to solve the problem and solve the problem. Um, so I got off on that, but like investors, I would start reaching out to them immediately and start going through your phone, going through your social media, and just reaching out and asking them that question to at least start building a list, right? And unfortunately, you're not going to know how good that list is until you do that first raise. It's going to be scary because you're going to put EMD on the line, and that's your money. If you decide to back out after your due diligence period, you're going to lose that money. And the first capital raise will be tough. Like you got to have a good deal, you got to have a good presentation, you got to have a good, deal deck. Which we have sick deal decks, by the way, and that is very, very, very important. All right, let's see what other question that we had here. Let's see. Someone was asking how much would you be willing to pay per pad for a 500 plus pad portfolio in Alabama, 10 individual parks within a nine within 30 minutes of each other, and one is an hour and a half from that group. Two parks are lakefront. The total portfolio sells upside with about 100 vacancies. Total average rent is $425. I don't know. Let's do this. So let's take 400 times 425 times 12. That's the gross revenue on this beast here. I'm going to guess you're going to be at 65%. So your NOI is probably that. I mean, I don't know. I mean, in that area, I wouldn't like to pay more than a 6 cap or a 7 cap for that. I mean, I wouldn't, maybe 18 or 19 million. 1326. That was your NOI. And how did I figure that out? I just divide by 0.07 for a 7 cap. And that's what I got there. But we can also look at this. I don't know, maybe a six cap at the most. 22 million maybe at the most, but I don't know. Somebody's got to be really interested in Alabama to buy that. And I don't know where they are in Alabama. Now, if they're in Huntsville, that's a different story. I mean, that's a great smoking hot market. That's different, right? So again, like a lot of this just sort of depends on where it is. So I don't know. That's probably what I would say. 18 to 22. If you want to sell it really fast, then you're gonna have less. If you don't care, then offer ask for more. Okay, I think Dean, you had asked a question. I don't know the other day or something. It was come from residential real estate business. I'll use an escalation. I don't know what this is from. Maybe you were answering something that I had. If I'm doing into a multiple offer scenario and I'm the winning offer, I'll always include any requirement to see the other offer, which force any escalation to ensure I'm not being bid up. Oh, I see. In a market, the very competitive, always brutal Florida MHP purchasing market, have you ever used an escalation clause in your offer when going against others? No, I have not actually. But I like that. I like that. So what I like to do when so a lot of times, so unfortunately, sometimes you won't know if you're in an offer battle, like, which I hate, by the way. I'd rather know it. But sometimes you can feel it. sometimes you can feel it when you're in the, like, okay, something's going on here. So now I know I got to put the freak on this guy, right? So that's a like okay, how do I do that? Well, one, I try and go show up to meet the broker face to face, or show up to the seller face to face, and like, here's me. Boom. If we can get a face to face meeting, if I can't do that, I'm gonna send them a video. Hey, this is Derek. I'm the buyer. I know I'm the buyer for this deal. We have tons of parks in the area. I love this deal. It's a great property. I know we can close. Right. So I'm just trying to pump some more certainty into them. I couldn't tell you how many deals I've gotten from a video. 2021, couldn't get a broker to call me back on this 3-part portfolio. It was the second purchase. It was the second closing that we were doing. He wouldn't call me back. I sent him a video. 5 seconds later, he literally calls me back. We ended up getting that deal. So shit like that works, man. Shit like that works. Is it corny? Maybe a little bit. I don't know. I mean, I don't care, dude. I just want to get the deal done. Like, I don't care. But I hate, Dean, us men, we get that testosterone going when we're in a competition for a deal. And especially me, I'm like, I'm getting this deal, especially if I really like it. Cause I'll be pissed for a little bit if I don't. Everett Tower, sorry, Derek just joined. You mentioned you have 6 different deal decks. What is the definition of a deal deck? I don't remember mentioning 6 different deal decks, but all good. So the a deal deck is basically like you just like an offering memorandum for our investors. Yeah, and it's basically just going to give an overview of the deal to the investors. It's going to give an overview of the returns, the return profile, and what all that is. But it's basically like you see a broker. The broker has an offering memorandum, basically showing what the deal is, but the deal deck will basically have the same stuff, but it'll show like investor returns and potential investor returns and whatnot. So yeah, cool guys. I'm definitely I love coming on here every week and chatting with you guys, and I hope you get some value out of it. Seems like people do. If there's any way we can make it better, just let me know. We may end up doing another underwriting thing. I like that idea. Justin, I may do that. I may do that because I love talking about underwriting. I get hyped. I get hyped about it. But you guys would have to bring me some deals. You guys would have to bring me some deals to the table, and we can underwrite them here. So if you guys think you could do that, or just bring them here. Like if you guys have something that you're looking at, if you don't want to say where it is and you're not under contract on it yet, you can give me a ballpark and just give me the the whatever on it, the high level, and we can go through and figure out if it's a good deal or not. Or if you could just go pull stuff off of LoopNet and Correxy and send it here, send it in the messages, or I'll pull them up and we can go through. And we might even find some deals. And I'm telling you, I find deals on there. So I don't know. Everybody else can keep thinking everybody else can keep thinking it's a dumping ground, but I'm going to keep finding deals there. All right, guys, have a great Friday. We will see you all next week. I'll see you in the Facebook group. Also, look, if you check out victorycapital.com and you want to join our investor list, we have a massive pipeline of deals that are coming. We'd love to have you as a potential investor in some of our deals. So we have one more question here. Duman, I hope I said that correctly. How you doing, man? Can you share the details of your mastermind? Yeah, so basically we have it's a a one-on-one sort of done for you mastermind where we're going to help you find the deals, right? We're going to get deals under contract for you. It's an action program where we start like once you've defined which market you're in, like we start actually helping you do outreach in the area in that particular market that you're in. You and I, we have some people in this program now that people will meet with me on a weekly basis. And, we will go over that pipeline and basically start developing that, right? So you're sending out LOIs. Our team will write the LOIs for you. I'll help negotiate with the seller. Like it's really it's a done for you. Like, hey, we're going to drag your ass across the finish line kind of thing. And then once we get a park under contract, we do this. This is a 6-month program, by the way. Once we get the park under contract, we are going to obviously help negotiate. I'm going to do due diligence side by side with you on that deal. So we don't miss anything. We're going to go through the due diligence checklist and make sure it's good. Then when you close, we're going to help you do that. We've got lending relationships that we would introduce you to. And then obviously if you need help with capital and things like that, that would have to be something that we would work out. And then after we close, we help you get your operation set up. So you know what you're doing and you're not flying by the seat of your pants, right? So it's really like, hey, we're really taking you from like doing nothing to action to getting a deal and then setting that deal up correctly. And if we don't have a deal in 6 months, we'll continue to work with you until you do. That's essentially what it is. Sam, what's up, dude? How you doing, man? I can do this one real quick. I appreciate you sending this. So 40 Pad Park 22 TOH at 375, 16 POH at 700, 4 vacant, 22. Four, is that 4 vacant lots or 4 vacant units? And where is this? I need to know where this is, Sam. Yeah, I mean, I don't know where this is right now. I mean, is there any, are they asking, or they have an asking price? I mean, we can just do the math here. So 22 times 375, let's see, plus 16 times 700. So that's your gross monthly times 12. That's your yearly gross. You got about half park owned homes. So as we talked about earlier, I may take, and again, it just depends on where this is, 45% of that. 233 times 0.55 because I'm taking 45% expenses. So my NOI is going to be 128 roughly. Oh, Indiana asking 1.2 million. So yeah, if they're asking 1.2 million and that's your NOI, I mean it's a 10 cap, right? But that's if you're keeping all that park owned home income. I mean, so I don't know what you can get in rents there. I'd have to imagine you can get $50. I mean, I'd have to imagine that you could get $50 there. Maybe I'm wrong. So if you convert all the park owned homes and don't count any of the home sale value, and you just say, hey, everybody's going to be at 425 in year one, maybe you convert the park owned homes to more because they're paying, like they're already paying it. How many total? So 38 total. Okay, let's just say 38. 16,000 in monthly revenue times 12 is 193. Is it city water and sewer? What's the utilities, Sam? Well, I don't know. So, look, this is my new gross revenue. Let's just say 35% expenses, and I'm still there. You know, you're still at 125 grand in NOI. 1.2 is probably not terrible for that, but I guarantee that this deal is in a pretty rural area of Indiana, is what I'm guessing. Am I right about that, Sam? Like, how far is this thing from Indianapolis? So the seller already has a mortgage of 910K, so he's not going to let it go for any less than that. I mean, 1.2 probably isn't terrible. Now let's see, where's Wabash, Indiana? How far is that from Fort Wayne? I mean, look, it's sort of rural. Let's see, they got a Walmart. They got Scooter's Coffee, baby. They got Culver's. Do they have Chick-fil-A? I like it when places have Chick-fil-A. Yeah, well, I don't see Chick-fil-A, but I mean, it doesn't seem like a terrible number at 1.2, dude. But you always ask for less. So, are you going to be assuming the loan? Are you trying to assume the loan at 3.8 interest? If you're trying to assume the loan, I mean, that's interesting. Hold on a second. Hey, Sam, are you trying to assume the loan there? Is that the case with that? Yeah, if you're trying to assume the loan there, I mean, okay. Look, I mean, hold on. I'm going to pull this up for you guys here, and we're gonna do this in the new little calculator that we have here. Is it listed by a broker or is it off market? Yeah, you could do that. You could do that. You could take over that loan. You could take over that loan and do like a sub two kind of thing. or you could assume it. Okay, let's see if we can pull this up here. So let's pull this. This is the new, I hope you guys can see this. Okay, so your purchase price here, Sam, is this. What's the total occupied lots again? 38, you said? So CapEx and closing costs, like I don't know how much that's going to be, but let's just say, because you're going to have that. He's willing to sell or finance a down payment. I'm trying to get the whole thing. Got it. So you're trying to assume and, okay, it's by a broker. That's, okay, whatever. Okay. Uh, so are you guys looking at this here? So the rent, let's see, what's your pro forma rent? What do we say? 425 if we could get 50 $50 there. And then you just go up a little bit every year. Now 3.8. All right, can you guys see my screen here? Okay, cool. Okay, your expense ratio is not going to be that much. Let's just say we're 35% expenses. I mean, yeah, dude, the deal looks good. I mean, just kind of as is right here, just even assuming like, a 70% loan. But what is he willing to sell or finance this at? I mean, let's see if it works. If, so the thing still calculates. Let's just say it's a 98% loan. Are you going to get him to do that at 3.8% interest? I mean, if you are, I mean, it looks like a pretty good deal. I mean, you're doing pretty well. If you bring 75 grand for CapEx and closing costs, you are, 55 grand in net cash flow, 17%. That's pretty good, dude. Yeah, I don't know, man. Put it in an offer. Look, even if you can't assume the loan, let's just say you can't assume the loan, but he's willing to hold a second. He's willing to hold a second and say the bank is just going to make you put 5% down. I would guess. I mean, is this park a dump? On a scale of 1 to 5, how nasty is this park? 5 would be sex, drugs, and rock and roll, and 1 would be, 55 and over, 5-star community. Anyway, so I just wanted to show you this at like, let's just say we can get this now on a 30-year AM. So the deal is still pretty good, even if you can't assume that loan. Obviously, if you can assume the loan at 3.8%, I mean, that's, it's great. But you would want to figure out like how much time is left on this loan. If there's 2 years left on it, then, well, still might be okay. You still might have enough time. But this deal, assuming that we can get these rent increases, which I think are relatively, modest. I mean, it's like $25 a year, 20 couple bucks a year. 2 years, okay. That's not because by the time you get under contract and by the time you close, it's going to be 3 months, 4 months. That's, by the time you get negotiated and close, it may not be a bad little deal, man. May not be a bad little deal. I mean, there's a lot of room on it. There's a lot of room on it, which I like for a first deal, because in this, we're not even counting the park-owned homes. Maybe you can sell the homes for 5 grand each or 10 grand each, or on a rent to own. So instead of 425, you get 625. Or you could tell them, hey, you're oh, good, the local bank is willing to keep the park. That's even better. I love the local bank idea, because they'll do some weird stuff. Like they'll do some like nonchalant stuff. I like that. Yeah, dude, because you could even go into the park on homes and be like, hey, you guys own the home now. You're paying the same thing. 425 is going to go to lot rent, or even 495 for lot rent. And the rest goes to the home price. Right. The only thing I really don't like is the location. I mean, it's an hour from Fort Wayne. It's okay, but I doubt anybody in Wabash works in Fort Wayne. I mean, maybe they do. But that wouldn't be a bad first little deal. I wonder why he wants out. He's getting 725 for park and home rent. I'd be curious as to why he wants out. And look, if you keep this puppy for 5 years, your NOI growth, your expense ratio would probably be a little bit less here. Your stabilized value at, let's just say, an 8 cap is 2 million. It's not, it's not a great bang on your equity, but it's okay. I like these deals where I can do this in a couple of years, because I doubt you're not going to get a 6 cap in that area. He's 80 years old. What did he do? Just refinance it recently then? Sounds like. So I hope that helps, Sam. Does that help? I mean, I just put an offer in, dude. I mean, put an offer in for, look, it Look, I think it works, and you could probably make it work at 1.2, but just say, hey, man, 1.105, 500. I always like to make it look like put a little bit of effort into the offer. I can just do it so fast. If you offer them 1.1, hold on, let me just look at this here. 1 divided by, as you said, I think you said 38 occupied. It's 28 a pad, right? Yeah, it's pretty good, dude. I mean, just put in an offer, man. How did you find this, Sam? So this would be another question that could make me either dislike or like the deal more. Did you find it? What kind of broker did you find it from? Is it like an unknown broker or like a residential broker that's not necessarily used to mobile home parks? Please let me know. Please let me know. Because I like buying deals from some residential brokers that somehow get a mobile home park listing because they actually will sell stuff at a fair price. A lot of them are, they would be, oh, I can get you 1.8 for this damn thing. What kind of broker did you get it from, Sam? MJ, what's up? How'd you choose your partners? Well, it was actually kind of interesting. It was just kind of like we fell into a deal together, and it just kind of lined up that one of the partners brought more value. And in my first couple deals, but my operations, oh, perfect, Sam. Perfect. Perfect. Yeah, I think you should throw in an offer, bro. Throw in an offer. Yeah, back to MJ's question. I would say, you know, uh, you got to look for people that are aligned and complement your skills. Like I'm good at raising capital. I'm good at being the mouth here. I'm good at finding deals. I'm like really good at that. And then my partner, right, like my operations partner, Paul, and he's my general partner, is that he's good at all the other stuff that I'm not good at. We just complement each other. He doesn't want to get on here and promote Victory Capital. He wants to, work on our systems and our processes and things. So like, you know, that's how I would do it. And make sure your partners aren't assholes. Like if you find a partner that's like out drinking 5 times a week, I wouldn't make them a partner. I don't care. I don't give a shit how much money they have. If your partner is cheating on their spouse, like I wouldn't want them as a partner. Like, what are they going to do to you? Right. Um, like what, look at some of this other stuff. Like I just wouldn't be about that. So I hope that helps. I hope that helps. But yeah, I think MJ, another thing here too is that you could, go to these networking events, stay in the group and stay connected with the group. It depends on what you're looking. Well, you'll find people doing that, and also depends on what you're looking for. If you're like, hey, I'm good at this, I need capital and I need deals. Okay, then you want to find some people that are good at that, because it's really all this is really about the having the deal flow and the capital to get this shit done. Yeah, Sam, just put in an offer, dude. Put in an offer on that. What is the sewer? I'm assuming it's septic. If it's well. Gene asks, hey Derek, if you're looking for a park in Ohio and Michigan, I know a couple. Not really. Haven't really jumped into those markets yet. Although I will say we would look at it if it's in Columbus or really, really close to Columbus. I like that market. We've looked at Dayton. Don't really like it. Michigan, I think if we were closer to some of the larger MSAs, we might take a look at it. Hey guys, so I hope that helps. We will see you all next week. We ended up going an hour here, which I love, by the way. I love doing this. So yeah, look, let's jump on next week. We'll be at 12 sharp. Again, I actually may be in Arizona next week somewhere, so I may be in a hotel room or on the road or something. But we'll figure it out, and if we can't figure it out, we'll try to do it another day. So thank you guys for jumping on. Look, if you want to check us out at victorycapital.com, check us out. Invite your friends to the Facebook group if you're interested in our partnership program and our mastermind. Just shoot me a DM or whatever, and we can talk about that. But yeah, let's go do some deals, guys. Let's do some deals. Sam, send the freaking offer, dude. I'm gonna end with that. Peace.